Yeah, Thursday, the 28th of December. Hope everybody had an absolutely amazing trading day. I want to welcome you to the Daily Market Commentary. I am your host, Chuck Fulkerson, as we are, we are literally at the tail end, maybe figuratively, at the tail end of 2017, looking to usher in 2018, as tomorrow will basically be our last day of trading for 2018. And today we had a little bit to talk about, not a whole lot, but still a little bit that we can discuss and go over. So for those of you that are new to the channel, welcome. Glad you're able to make it in. We look at the same about 10 futures markets every day, where we identify potential turning points in the future. But most importantly, with those futures markets, is that we are leaving our lines on the chart so that you can see what happens with potential reversal points over time. And I will tell you, that holds me accountable. And today is one of those days where I'm going to be held accountable. So thank you for joining us. Those of you that are here regularly, please make sure that you subscribe to the channel so that you get regular updates when we release the videos. So let's go ahead and dive into it. So, the S&P continued to do the same exact thing that it's done for the last couple of days, a whole lot of nothing. And that whole lot of nothing was a continual trend sideways. And, we're putting in a little bit of a support area right here at about 2679, 2680, kind of in that range. There's a little support. So you could get a breakdown out of there. I will tell you, I'm not going to be willing to short anything on this market. I don't. You know what? There's a potential breakdown if you want to take a short on a breakdown out of this area. If you have the, we'll call it the chutzpah to short right here. I don't have the chutzpah to short right here. I'd be much more inclined to look for a long when price returns to that area. Although I'm not saying that that's a bad trade. Once again, as I've said this, if I've said it once, I've said it 100 times, shorting the market's like tugging on Superman's cape and spitting into the wind. Not something that we want to do when we're at an all-time high. Let's take a look at the Nasdaq. So the Nasdaq, we had this area here. Now, this area in the Nasdaq, which we've got highlighted, corresponds to this area in the S&P. So the Nasdaq, by being closer to that reversal point, tells me that it's slightly weaker than the S&P in general. So we're getting a little bit of weakness in the Nasdaq, more so than we are in the S&P. Yesterday, we went through and changed this area to a dashed line. Now, remember, a dashed line means that we're going to get in as price comes out of the area, meaning we have to wait for price to come in and then exit the area. It's a slightly lower probability area, and the reason for that is because we've almost come into it once, and it didn't get a stellar reaction out of it, and we're just kind of chopping around. So, based upon your risk tolerance, you may not want to get into this thing. I got to tell you, I'm not in love with it right now. I don't know if I'm even in like with it. It's just not really setting up for what I like to see as a potential high probability turn. I do still like this area below it a bit better, and I like the gap area down here even better than that. So I think there's good buying opportunities for short-term trades in here. You just got to be patient and wait for them. As far as shorting it, once again, I have a hard time shorting this market kind of where it is. On a 15-minute chart, you will find a little opportunity right here, and I can kind of point this out as a potential shorting opportunity on a very small time frame. Call it the 15-minute chart. You've got that little area right there. So keep that one in mind. That one could be a good opportunity to get short on a return back into here. I'm going to change the color here on this as we use purple to dictate our reversal potential lines. Okay, let's go to some commodities. So in crude oil, we've got a little bit of a potential buying area down here. This could be a pretty decent support. This acted as resistance in the past and is a fair price value area. We had a parabolic move out of here, which showed a big balance inequality between buyers and sellers right there. So this could act as a decent floor coming back into it. Just looking at drawing a trend line across this bottom, and we don't do too much on the trend lines, but just connecting our wicks here, drawing our trend line, we still have a pretty good upward trend. In fact, we're overextended from that upward trend, which would tell us that there could be a pullback coming back down. Now, 60 seems to be a pretty good whole round number, and that whole round number for 60 could, that could be a little bit of a resistance point where price has a hard time kind of pushing through. One more thing to point out, by the way, back on the Nasdaq, part of the reason that I think, now once again, this is just my opinion for what it's worth, but one of the things that I believe that the Nasdaq is weaker, why I think the Nasdaq is a bit weaker than the S&P, is because I think a lot of these Nasdaq stocks that are more technically driven have had a huge run up. The Nasdaq's up 30% for the year, and I think we may get some end of the year profit taking. There is a potential that people are trying to close out positions this year, take the earnings this year, and because they may not be able to, based on the tax code changes, they may not be able to capitalize on, on as many deductions next year. This is just pure conjecture, but I think that could be a reason why we're seeing the S&P outperform the Nasdaq a little bit, simply because it's end of the year profit taking. So I wouldn't be surprised tomorrow to see a bit of a sell-off with that in mind. So just kind of keep that in mind. There could be a bit of a sell-off tomorrow with some end of the year kind of profit taking. And the crude oil resistance at whole round number kind of reminded me of that. So gold, for those of you, I posted a tweet a little bit earlier today on gold, the candle-to-candle style of trading. And once again, that is continue to allow you to move your stop up to below the prior day's low each day. It's continuing to run. We do have a potential short somewhere up in here on the smaller time frame. Go back down to that hourly time period. And that potential short, we've got it as a dashed line because it's already been used once. So since it's already been used once, slightly lower probability, but it is still in play. If we do get a lower low and you get out of that long, there is going to be some pullback opportunity. And when I look back, I'm going to remove this. We're done with this area. For those of you that didn't catch the candle to candle, maybe you caught the breakout long. So both of those trades working out pretty effectively. I think that we could get even a good opportunity here as a potential reversal back into this support area. Now, this area of support was a prior area of resistance, as you can see that it acted as a ceiling before then having a little bit of a fair price area and then popping up from there. So if you've already missed a lot of this trade, maybe you'll get another bite at the apple back down in here in gold. So bond market. So let's go take a look at the bonds. Now, speaking of candle-to-candle trading, we talked about the bond area. Now, this bond area, remember, this was found, this big wide area was found on the daily chart. So when I go to the daily and we talk about it in the candle-to-candle style, remember that we get in on a higher high, and our stop gets moved up to below each day's lower, higher low. So in this case, your stop will be moved up to about this area here. And with that stop moved up to here, that means that you've locked in some profit in this position. May not get a huge move out of it, fair amount of weakness today, but there's no reason to be out of it yet if you continue to move that stop up to below each day's higher low. Next, the Aussie dollar. Now, the Aussie dollar, I talked about a potential breakout long on the Aussie. So let me bring this thing up a bit higher. And we did get the breakout today, but I tweeted out earlier, I kind of feel like it's, my Aussie long is kind of like the Bills' playoff chances. They're not dead. I'm just not feeling real good about it. And that's kind of what happened here. We got the breakout, it pulled back a little bit, and now it's just kind of chopping along. Could still work, could still be very effective. Remember, on the breakout, your stop would go below the prior pivot low. So your stop would be down here. So this little pullback's not going to kick you out of the trade. Your stop, based on the rules, should be below the prior pivot low. If you're not willing to take that much risk, here's a hint, don't take the trade. Not really working out the way I would want it to yet. Now, one of the concerns that I got a message from a subscriber today. One of the things he said is that we're coming up on what could be some resistance, some supply, some bearish pressure in the Aussie. And he was talking about this area right in here where these kind of wicks have overlapped each other. And that is probably what's slowing us down from truly getting a good breakout. Is these upper wicks definitely has, if I move this to a 4-hour chart, you'll see that there is a little bit of consolidation right through here. Now, the reason that I still was willing to take the breakout long was simply because that acted as a support, which then became a resistance point through here. Now, I would be a little bit more concerned and be willing to take some money off the table. I'm actually a bit more concerned about this area here on the 4-hour chart than I am the one below it. This area here might work out a bit better. Next, let's take a look at the euro. So the euro was one that we've got a reversal set up. Price came in, started to go out, and then failed. Just didn't work out, went against us. And so that euro position, you may still be in it. And if you're in it, I'd be very cautious with it. You may have already been stopped out of that particular trade. Last and certainly not least is the Canadian dollar. And the Canadian dollar, we still have a breakdown here, which I expected to get filled. And, well, there's so much for my expectations, right? We're still waiting on that area to kind of come back. Doesn't mean that we're dead in the water. We're just, we've got an area up here for a potential reversal trade. So we've got a breakdown here and a reversal up here. Both of them we're still waiting on. Last and certainly not least, the Great British Pound. The Great British Pound, we did get the breakout to the upside of this descending triangle, so some of you still may be in this thing. If you're in this thing, I'm seeing the momentum on this move up is waning. We're getting a little bit of a waning here, so be aware. We are still on a rising trend line here on the smaller time frame, so you still may get another move out of it. Just be aware of it if you're in this thing already, to be cautious with taking profits. And then the Japanese yen. We got a nice move out of a Japanese yen trade. Worked out very well. It's come up to it again, gave you another bite at the apple, but this apple's tasting pretty sour. It hasn't really done anything yet. So I'm going to remove it as I don't want to leave that area in here. You could still be in it. There's no reason to be out of it yet. It certainly hasn't hit any stop loss points. But by not really doing anything, it really shows me a fair amount of weakness. So that's all we have for today. If you've got any questions, please send me an email, chuck@iiefinancial.com, and I will make sure I do my best to get back to you, or at least address it in the video. Leave your comments below, and remember to like the page, share the page, tell a friend, tell a neighbor, tell a buddy, tell whoever you want. Thanks so much, everybody, and I will see you again tomorrow.